Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Thursday morning, October 3, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. Markets calmed down Wednesday as investors' focus turned, at least temporarily, back to the US economy from an increasingly volatile conflict in the Middle East. The prospect of widening hostilities between Israel and Iran on Tuesday had sent stocks lower and oil prices higher. While oil prices kept rising on Wednesday, moves in major indexes were relatively mild. Investors monitored Mid-East news after Israel and the US vowed to strike back following Iran's attack on Israel on Tuesday. US President Joe Biden said on Wednesday he would not support any Israeli strike on Iran's nuclear sites in response to its missile attack and urged Israel to act proportionally. However, investors received a bit of good news from the economy yesterday. ADP data showed the US private sector added 143,000 jobs in September, ending 5 straight months of slowdown and beating economists' forecasts. Data released early on Wednesday showed US private payrolls increased more than expected in September, further evidence that the labor market is not deteriorating. To some investors, the recent data is a sign that the concerns about an imminent downturn are overblown. The Dow Jones Industrial Average rose 39 points or 0.09% to 42,196. The S&P 500 gained 0.79 points or 0.01% at 5,709. And the Nasdaq Composite edged up 14 points or 0.08% to 17,925. A strike by 45,000 dock workers halted shipments at U.S. East Coast and Gulf Coast ports entered into second day on Wednesday with no negotiation scheduled between the two sides, sources said. The dock workers' strike is costing the economy roughly $5 billion per day, JP Morgan analysts estimated. In stock specific, Nvidia shares rose 1.6%, helping to lift the S&P 500 technology index. However, Tesla shares fell 3.5% after the electric car maker reported third quarter vehicle deliveries below estimates. Among declining shares, Nike skidded 6.8% after the athletic footwear and apparel maker withdrew its annual revenue forecast just as a new chief executive is set to take charge. Shares of Humana Incorporated fell 11.8% after the health insurer said it expected enrollment in its top-rated medical care advantage plans for those aged 65 and above to decrease from 2025. Meanwhile, oil has extended a surge that saw prices spike over 5% on Tuesday, the most in almost a year. Brent crude and West Texas Intermediate futures were both up more than 1% on Wednesday, with the traders paying a premium amid the prospects of risk to supply from heightened Israel-Iran attacks. West Texas Intermediate crude oil moved higher 2.81% to $71.79 a barrel. Brent crude, the international benchmark, rose 2.5% to $75.37 a barrel during trading. Gold edged lower 0.37% to $2,651 an ounce. The 10-year Treasury yield surged up 5 points to 3.802%. Investors still believe that the U.S. economy is going to see a soft landing. They now remain focused on September non-farm payrolls data due on Friday, while U.S. jobless claims data is due Thursday. JP Morgan Chase and other big banks will kick off S&P 500 third quarter earnings session on October 11. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.